All right, so what I have set up here is on the right, I'm running the new version that I'm burning in. All right, this version includes special processing of the low volume nodes. All right. On the left is the production release charts. In both cases, I'm using a 15 tick stop. This is a change. Attention. Okay, we've been using 10. All right, but the total risk is the same. So I was using 10 tick stops, but taking 3 trades. Now I'm using a 15 tick stop, but taking 2. So the amount of risk is the same. So in the max daily loss, this is the same here, 215. I do have the maximum trade losses increased. This is the safety net, so that if something crazy happens, the system will kick in and take you out if you exceed that number. All right. So now, because the stop is 15 ticks instead of 10, I have to increase that value. I'm trading 2 contracts, so 15 ticks times 2 is $150. So what this piece of the system does is, if any trade loss is at 160 or more, it'll automatically flatten you. Okay. And then the other key thing is the limit entry offset is 5. Okay. And so we're going to go over this spreadsheet in just a moment to explain that, where I came up with 5. All right. All the ads are turned off down here. Okay. In the production release, hold on here. So this is the charts that you have. It's the same. All right. So it's attached trade window chart. All right. So 15 tick stops here. All right. Whoops, this has to be increased. I'm glad I checked. So the maximum trade loss is increased because the stop is increased. And then limit entry offset of 5. Okay. So there are other options that I have in the newer system that you don't have yet, but likely will release this weekend. So now let's review sort of the why I'm using those values. Also, we're starting today at 7:05. This is a sheet that shows different options, and it's just using last week as the test case. So I ran tests using different stops and different entry offsets, different settings for the low volume nodes over and over and over last week. Okay. I covered much of this in the video that I released yesterday, so you can see, you can go back and watch that. But I did do some extra since then. So just the way you read the spreadsheet is, here's the stop amount. All right, this is for let's start here. This is for the production release. This is for what you have right now. All right, so stops of 15, 10, and 10, entry offsets of 5, 5, and 1. Okay, so if I ran last week with 15.5, that was my result. 10.5, that was my result, and 10.1, that was my result. And it's this case here is the one that had me searching for a different answer. All right, the fact that the markets are whipping around so much, I was getting nicked a lot. I wanted to understand what's the impact of changing the limit entry offset. All right, and what I've ended up doing, what I converged on is 15.5 as the choice, but I'm not increasing the total daily risk anymore, because instead of taking three trades of 10 ticks, I'll take 2 of 15 as my max loss here. All right. We'll cover this in a minute. That's a little different. Up here is the newer special low volume processing nodes. And part of the thought process here is that at the low volume nodes we are we're looking at it in a somewhat simplified way, and I was concerned that was noisier in the current environment. But once you start testing different options, you very quickly realize that's not the case. So it's the same thing here. The stop, entry, offset. Here is whether or not I include that special processing. Yes or no. And then here is if I do I restrict the direction when I'm outside the value area. So that means if I'm above the value area high, only go long. If I'm below the value area low, only go short. So I can turn that off or on completely, or I can turn it off or on for just low volume nodes, or for the kind of the normal processing. Okay, this applies to the new chart here, the 1015 chart that I'm burning in this week, trying to release this weekend. Okay, so the first thing is that I was thinking that restricting direction outside the value area was super important. But when you look at just kind of the normal settings, a 10 tick stop and a 1 tick limit entry offset, there's no difference really. You include the low volume not processing, restrict direction or not. This is basically the same answer. All right. So then, I changed the limit entry offset to 5 and tried different cases. Take out the low volume nodes and the number's dramatically less. Okay, this is kind of the key thing. Leave the low volume nodes in because of this column here. Okay. And so then take this and turn off that restriction one way or the other, and you can see it's basically the same. It doesn't matter. You can restrict it or not, at least based on last week's action. So it didn't have an impact is the point. All right. So then the going to the next step, I went to, well, what happens if I went to a 15 tick stop with a 5 tick limit entry offset? All right, but didn't change anything else, still kept the total risk the same. What happens? You actually do better. All right, it's actually not a lot better. It's a little bit better. You end up not getting nicked. Is what happens, or not nicked as much because you're getting a better entry, so this is equivalent to a 20 tick stop from these settings here, right? So you're getting a better entry and you're giving it more room. Okay, this conceptually makes sense to me because of the environment's more volatile. But then, to be thorough, I started looking at different variations of those parameters. So the first one was over here, which was restrict keep everything else the same: 15 tick stop, 5 tick limit entry offset. Include the special processing for low volume nodes, and this time restrict the movement outside the value area, and it's a dramatic difference, right? It's 20 something percent. Okay, so that suggests don't don't restrict outside the value area. Okay. So then taking this as my baseline now, vary the limit entry offset. And it's actually pretty interesting what you get here. This is all using just 1 week worth of data. It's not that much data to work with. It's not that big a sample size, though it is extremely representative of the current activity. We choose 1 week because it just takes so long to run the replays right now. Okay. So what I found interesting was if you graphed this, there's like a sweet spot between too much and not enough. If you go 0, which is basically like a market order, this is what you do, 775 for last week, but you hit max loss a lot. So this is the case where you're catching those moves that just pop immediately. Okay. If you do a 1 tick limit entry offset, it's worse. Okay. And then 2 is worse still. 3, even worse. It's really weird how 3 and 4 are there's this like dead zone where if you are setting your entry at 3 or 4 ticks off the end of the bar, you really don't do very well for the week. But if you go to 5, suddenly you do really well. So it's odd. And I don't logically understand what's going on there. This is half the bar, this 5 ticks, which by itself is kind of interesting. And then I also went the other way, 6, 7. You can see it starts to tail off here. So there's a peak right there, and then it gets worse as your limit entry offset gets further away from the end of the bar, and then much worse in this 2, 3, 4 zone. Really 1 through 4 is not that great. 0, these two would be okay. You know, the standard 1 tick, and 0 basically a market order does better. But this is much more painful in terms of you'll have days where you're immediately getting whacked and you're done. All right, this is why I don't like it. So the reason what's not shown is the actual breakdown of the day by day losses, and the reason that I like these better out here is because you have less of those days where you're taking a couple trades and immediately you're done. You're okay. So I think your choices are between here and here or here, and it's a function of your personality. If you go this route here, which is what I'm doing today, then let me make that green. Then you're gonna miss those moves where the market just pops. All right, you don't have even a shot of getting filled. What this is saying is there's a recognition that you're getting a signal and the market is just really whipping around. Whereas here, these two, you're much more likely to get filled. All right, but particularly on this one, whoops, on that one, you're getting whacked quite a bit. Like the days when you're taking a loss, it's a full max loss. There's never any sort of minimal loss. All right. One other thing I tested down here was, well, if I'm setting my entry offset so far back, maybe I should give the system more time to get filled. All right, so currently we have a setting that says, well, once I place an order, how many bars does the system draw before I cancel that order? So that's this bars till cancel row here. And it's currently set to 2, which really means you got to get filled on the next bar. I place the order, I need to get filled on the next bar. And if I don't get filled on the next bar, cancel. That's the current setting. Any increase is not useful. If you increase it to you give it another chance, then that number goes way down. We're comparing these columns to this green one up here. Okay. If you give it more, 4 or 5, this looks pretty good, these two here. But when you look at the day-by-day breakdown, it's only one day where that worked really well, and all the other days you were taking losses. Okay, so I don't like that. I want the case where I'd much rather damp down the days where you're taking a max loss, even if it means I'm less profitable. In this case, it's about the same. These two values compared to this one. But this is a much more it's a steadier amount in terms of profit than these two here. So keep the bars still cancel at 2 is the message there. And here's data to support Y. And so this is where I came up with what I'm burning in here. All right. And the what happened here is there was a bug in the system that I found. So I was burning in this new low volume node processing, wanting to release it on this past weekend, and then I couldn't because I found a bug, and so it took me a while to fix that bug. And in fixing it, I ended up going down this path here to understand did I fix my bug or not. All right. And this turned out to be really useful. So this is kind of where we're at right now. So as long as we're dealing with volatility that is in this range, up at this high, then these I'm going to continue to use these settings, and I'll just evaluate them. If we settle back down, we'll evaluate where the kind of to see if that sweet spot changes. I would expect it to as the market gets quieter. As the market gets quieter, I would expect to go more down to here or here. Okay, and here we are at the end of the day. My result is 0, and that's actually a really good result. And the reason is the market was ugly. So we start trading here. 705. This is a choppy, ugly mess right here. So staying out of this is really a good thing. All right. This is interesting where the market climbs to here. All right, that's the value area high, and you can see previously, the bars are orange, means I'm looking for an entry. And you don't see the orange bars here. And the reason is that also the point of control moved up. This is that blue dashed line. So we know that this is a dangerous area. So that's why we're not doing anything up there. You'll see also that there's a short there, 286, which we end up not taking just because we don't get filled. So the order gets placed on that bar, and we're conservatively now placing the order there. It doesn't get filled. The same thing happens here on this long, actually. So right here, this 101, that's whoops, did I push the wrong button? There we go. That 101 is a long right there. The order gets placed, 5 ticks back, and you don't get filled, and you have to get filled on that bar. All right, so let's see, what would have happened if we done 1 tick? 1 tick, we would have moved the stop to entry -5. All right, so it would have taken a small loss. Let's see, so nothing there. And again, just choppy, ugly hell. So the system is doing exactly what we want, which is nothing. Just stay out of that. Stay out of this mess. Okay, we get down to the value area low and we start looking now. We'd like to get a short in here, right? But the numbers here are just debugging codes to help me see that the system is doing what it's supposed to do. These are all don't do anything. All right, the action coming back is don't take a trade. Obviously we would have liked to have seen the short, but what I do like is that we're in the right place to be looking. All right, now we're using the model that says these are volatile markets. I want a very clear signal, so this is why we're not getting anything in here. The signal's just not clear enough. It's a nice move down. Had we gotten in here, we get nabbed on this. We get taken out on this little pullback right here. And then what happens is we break lower. It's price discovery mode now. We're way outside the value area. And these low volume nodes get set. And so then we start looking. Again, you can see it's exactly the right place to be looking. All right. The market's pulled back. It hasn't, a lot of times we'd want it to pull back all the way up to there. Here, it's not doing it. But the system sees that and starts looking. All right. But again, I need a really clear signal. The only clear signal I get actually looks like a long, which is a 151. But you'll notice the blue background. So the blue background says you're not allowed to get long. And the reason is that you are now outside the value area and these points are too close together in distance. So I don't mean in distance up and down. Alt2. I don't mean that way. It's only 4 ticks higher. All right, so the market has demonstrated that there's this ceiling right there. And so when we get outside the value area, we use this wave-based chop avoidance as a way to keep us out of trouble. Right? Again, we would have liked to have gotten a short there, but the order flow looks long to the machine, which is interesting by itself. It means that it's there's some games being played. It's really tricky. We get down to here, we keep falling, looking here, no signal. Looking here to again, this is really interesting. Again, that looks long, right? 151, 197, 197. Those are all long signals. So to the machine, the patterns the machine learning system has trained on for the last almost 2 years. The order flow pattern matches a long signal. So, but the market's falling, so it's wrong. As it happens, we don't take a trade. Now, there's a couple things here. We don't take a trade simply because the market falls apart and we require an up bar in order to get long. There's also a setting that says that you could set once this releases that says only go short if you're below the value area low. I currently have that turned off. We reviewed that earlier, actually, in this video. But in normal markets, I would expect to be turning that back on. Right now, the markets are pretty wild. They're moving in both directions pretty violently. Let's see. We set a low volume. No, it's not too late. This is 1240. You have a chance here, but I stop at 1240. So that's it. So I see a couple of opportunities there where the patterns matched incorrectly, but I end up not taking a trade just because of the way I verified the entry. And then here, I think it's the same thing here. There's a lot of opportunity in here to find a trade. It's pretty clear to me we're in exactly the right place to be looking. All right, so not finding a trade there is a function of me being cautious about how volatile the market's been. Same thing here. You can see we're in the exact right spot to be looking. All right, the market is going to make a decision here. As it happens, it breaks lower instead of heading back up. Okay, so we'll see what tomorrow brings. So far, 0 on the week. Take care.